Hi, this is Keith Schneider, CEO of MarketGauge.com, and this is February 15th edition of Market Outlook. Please be sure to sign up for this by going to our website, www.marketgauge.com, and you receive this free every week. Okay, so quite a couple of weeks in the market, certainly reversed what had been a downward bias where the market was basically going sideways to down for several months. So lots of interesting things going on. Obviously, the Greek debt crisis and Eurozone situation is still unfolding. There's going to be lots of news going back and forth. Any definitive proclamation I would pretty much take with a grain of salt until there are some definitive moves by the ECB and watch what comes out of Germany to try to keep the Greeks in the European Union. But nonetheless, the markets reacted in a really positive way across the board. Couple things to note. As you can see on the daily chart, we're now above the 50-day moving average for the whole week of last week and the week before. So this was a nice, good size bounce, almost 10 points, almost 5%, and we closed on new highs. What is a little bit disconcerting is the fact that volume is relatively light. If you notice, the yellow line here is where the average daily volume sits, and we've been trading well under that, even on new highs. I'd like to see bigger volume come in and follow through. Now, it could be just a temporary, let's see what happens until later this week or beginning of this upcoming week to see if there's real follow through. But meanwhile, you can see no real major volume accumulation days have occurred. Additionally, we are at the upper end of the RSI, relative strength indicator, but not quite overbought yet. So you still have some more room on the downside, on the upside as well. So in terms of the weekly chart, let's take a look at the weekly chart on the S&P. There's the weekly chart, and you can see, look at all this compression here, and really you can see that over the last 6 months, really you're just trading a couple percentage points above and beyond that midpoint. So I'm looking at this whole period in here, this test of the 65-week moving average, which now has moved up to 193 as an important support level for the longer term trend. Going back to the daily chart, just wanted to point out that that 204 level is also critical. We tested that earlier, about a week and a half or so ago. It held and took off from there. So that is definitely your key support level. So overall bias, positive in that area. Now, one thing that is very interesting is look at IWM. Remember, the stronger the compression, just like physics, the stronger the reaction. This has literally been going sideways for well over a year, almost a year and a half. You can say that IWM has been going sideways. And finally, on Friday, we did kick up and close at new all-time highs. Now, what is strange, again, very low volume. So as we have traded up, we haven't gotten some real confirmation in terms of real participation by all players in the market. So that remains to be seen. So that is always the the catalyst. Huge volume coming through would be great, but as you can see, volume overall has been trading mostly on a downward bias up until about the beginning of the year, where you had beginning of mid-January or so. You did have a bit of a volume surge, but then the market just sort of went sideways. yet again. But again, important price action to me is the primary driver. All the other indicators, volume is secondary. You cannot argue with momentum. Okay, so we covered the other positive sign is the Qs. The Qs had been lagging for a good part uh, of the of last year, which was interesting. No leadership in what was the strongest index, and that turned out to be the strongest index and actually had some decent volume, although not extraordinary. So that's a positive sign as well. Let's take a look at the volatility ratio, short-term versus longer-term volatility. Well, it's 3-month versus spot. You can see we're running over the 1.2 level, which is pretty rich. It can continue. Good sell signals occur when you've been trading above that 1.2 level and flag down under it. But meanwhile, momentum seems to be positive. I'd be looking to see if the volatility spread between short-term spot volatility and 3-month starts to fade or continues higher. Meanwhile, that's overall on a positive note, although running rich. But remember, it can continue for a long period of time. Well, at least on a 30-minute chart, you're talking about, for multiple days, it can continue to stay overbought and continue its rally. But we definitely want to watch for this waning and dropping through that 1.20 level. Taking a look at just VIX in general, we have been pointing out that this move above the 200-day moving average, which it closed under for the first time, but it also, interestingly, sort of got scissored here. The 50-day pointing up nicely. The slope was up pretty good, and it crossed over that 200 for the first time in a long time. So this was interesting that volatility for the first time in quite a period has been increasingly on a steady basis. But then in the last couple of days on the heels of this rally, it definitely is trading down, now closed under the 200. So you're at a pivotal point. Again, these moving averages are interesting to watch, but they're zones. So right now, with this positive cross and a test in here, let's watch this very, very closely. A move back over the 50-day moving average could indicate yet the resumed increase in volatility, and in conjunction with that short and long-term volatility, a potential top in the market as well. So we have to stay totally flexible here. And again, the geopolitical chessboard, Putin's really good at playing it, could definitely result in resumed hostilities. The Greek debt crisis, which and austerity issues could definitely rear its ugly head again. In fact, there was some news coming out that they rejected some of the plans from the ECB and Germany. So let's see what happens there as well, because all of these things really contributed strongly to this 5% up move in the last couple of weeks. Let's take a look at Russia. We had pointed this out. Russia definitely took out that key level at around 1625, moved up nicely. We're in what I would call a weak recovery phase because the slope is strongly down on the 50-day moving average as well. So a little bit overbought here on pure price momentum. You can see 99. Wouldn't be surprised to see some digestion. We're definitely going to look for the market to hold around that 1625 level as critical support. Let's take a look at bonds. Bonds definitely got up to the top of its Bollinger Band, is now attacking its rising 50-day moving average and the lower end of the band. So continued short-term pressure, potential that it could be a long-term top or low in interest rates. But meanwhile, overall for now, all we can say is you definitely had a sharp sell-off from a parabolic move up. You could have said something similar back in October, where it took several weeks or actually a couple of months before the market digested that blow-off move. Could have a similar pattern here. Let's take a look and make sure we know what levels to watch for. Critical levels would be above the moving average, and actually I would say really over the 130.50 to 131 level in the 20-year would basically mean that the market traded below the 50, but it is rising. This is a massive long-term uptrend in bond prices and lows and yields. In addition, this level here that we stopped at on Friday is definitely a swing level. Look at this high here, this one here, potential stop here. This would be a natural support level. If we continue to really fall through this here, then there's a higher chance that the longer term trend might have peaked in bonds. Meanwhile, holding here, tested that rising 50 and a move back above that 131 level would definitely put us back into this was just a digestion of the bigger move up and a continued strength in bonds and other risk-off type assets. Okay, one last thing. Let's take a look at GLD. GLD not quite as strong, a little disappointing action. Obviously, it needs to do some more work. We're now in a bearish phase, or we basically closed under the 50-day moving average for a couple days, so you have a confirmed bear back into a bear phase. But again, these moving averages are areas. A move back above the recent highs over the last couple days could mean that the recovery is still back intact. So again, we're basically moving between these critical levels across all these different assets. You got to watch that short-term market action, because that's going to determine your profitability or not. Trying to figure out what the macroeconomic picture under these unusual circumstances, and they are. I mean, negative real rates for many countries. They're charging to hold your money. This is unprecedented. You can look back 800 years in the history of interest rates, and this is a first-time event. So the net effects on asset flows is very, very unclear and unprecedented. So it's hard to study history of the financial markets when you're in new ground. When that occurs, you go to pure price action and volume action and see where the money's flowing. Okay, hope this helps. Bye for now. See you next week. Stay frosty, because these markets are really interesting and historic at the same time.